Good morning, traders from each and every part of the world that you're joining this series of the Daily Morning Market Call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets while providing favorable trading condition at the same time. Now, before we proceed, today we begin with our usual procedure of looking at the forces driving the market so that to anticipate market direction. And interestingly enough, today we will be looking majorly at commodities, that is gold and oil. And this is because of the happenings of yesterday, which seemingly is causing volatility in the commodity market. On the side, also on the currencies, we are going to be looking at new developments as we anticipate economic data, high impact news coming in, which would influence the market. So I'll go here at hfm.com, economic calendar, and filter to high impact to see what is coming up. So yesterday we had news coming from China, PMI. We also had European Central Bank President speech, which we see was a follow-up. And we know that right now in the world, the Chinese market seems to be shaking the stock world with information which came in after the DeepSeek technology company caused volatility in stocks and indices, with focus on US 100 and S&P 500. Moving on to today, we also have the ECB Bank leading survey, which is a follow-up. To watch, something to watch, but not to expect immediate market volatility, because we obviously see the data is all going to be printed. As we walk into Friday, on Wednesday, that is tomorrow, all eyes are on the Fed's interest rate decision. Will we see the Central Bank of the United States or the Federal Open Market Committee cut their rates or hold their rates or hike their rates? The most possible educated suggestion would possibly see interest rate cuts or hold, but not hike at this moment, because we know the US economy is doing good but is yet to recover to its optimum mid-range level of 2% in inflation. So we also see the 47th president of the United States putting on pressure on the Fed or the Federal Open Market Committee to cut interest rates so as to cure this inflation problem that they are facing quite quickly. So all eyes for this week will be paying much more attention at the decision that they are going to make during New York session on Wednesday on the Federal Open Market Committee interest rate decisions. Now, on oil prices, which we are going to display in a short while, we see that oil prices are holding steadily and fell by 2% drop as Donald Trump ramps up tariff threats that could shake up global trades and the oil market further. Particularly, all attention would be on the unexpected Trump sparks Colombia sell-off with unexpected tariff spat. So the Colombian peso trembled as the nation was sudden, if brief, thrust into tariff war in the US, its long-term political ally, largest trading partner. So in a nutshell, yesterday we see Donald Trump imposing emergency tariffs. That's what his office called them, the emergency tariff on Colombia for refusing to cooperate on the immigration policy of Donald Trump in returning illegal immigrants from the United States back to their mother countries. So we see him imposing an emergency 25% tariffs, and this is going to shake up the market with a focus on commodities. And of course, the government of Colombia complied with almost immediate effect to the demands of Donald Trump, so as to cool down the tension that was already experienced sometime after the announcement of the same. We see also a threat of hiking these interest tariffs from 25% to 50%. We're going to be seeing how that would play out. Good evening, Geoffrey. Good evening, Britton. For those who have come late, no problem. You visit our HFM YouTube channel at HFM Kenya, like, subscribe, and click on the notification button so as to allow our algorithms to reach more and more people in the near future. So on the charts, this is the chart for gold. We see that gold yesterday from the daily time frame created a bearish candle, suggesting that we are seeing a reaction on the key area of interest at, let me get the marker and see where this happened. The area of interest at 2780.92. We see some sort of reaction from this area of interest. Would go to a lower time frame to see how this is playing out in retrospect. As we see the area of interest being tested right here, and price attempting to print price to the downside. Overall, we know that we are in a bullish momentum after the long correction, which could clearly be seen from the higher time frame, the daily time frame here. We were in a bullish trend. Price recorrected, and now we are back to the bullish trend. So that would mean if you go to a lower time frame, we would possibly want to see price coming and attempting to touch the 27.79 mark again, and possibly close above, as we wait for the tensions to cool down, as investors and central banks rush into the asset gold to use as a safe haven for their investments. On the flip side, with upcoming economic data and the various negotiations happening in Eastern Europe, we'll possibly see gold losing its demand because of stable market conditions, and we shall be monitoring that as we proceed. On to oil. Nice. So oil demand seem to be decreasing, which lowers the price of oil, right now trading at $72.52 per barrel. This is also because of the pressure put by the new administration of the United States on oil producing countries to reduce the prices of oil. So as the United States brings in attempt to lower the prices of oil, so as to mitigate the Eastern Europe conflict that is going on, where we see Russia invading her neighbor Ukraine, and the foreign policy understanding of this would be, if the prices of oil reduce, Russia being an oil producing country, it would lack funds to proceed with the war. Remember that the war has taken way long. They thought it's going to take 3 weeks. It is now over 3 years, still fighting the same wars, and wars are expensive. Now, in an attempt of the United States mitigation to reduce this warfare, as we know that the United States is the police of the international community, we see the old administration of Joe Biden attempting to reduce these prices, and we also remember seeing President Biden flying to Dubai to have a conversation with the monarch to reduce these prices and successfully. And now we see Donald Trump entry and the continuation of that foreign policy format. Now, most likely, Donald Trump may succeed, has higher chances of succeeding. If this proceed, we might see oil reducing in its demand drastically. As we conclude, as a disclaimer, these videos are meant purely for education purposes. They are not meant for financial advice. Kindly remember to observe risk management and do your due diligence. If this is your first time getting to understand about the financial markets, you would reach out to your mentor who has led you to this chat room of the daily morning market call to allow you learn the process of creating an account so that you also get to participate in the financial market as an investor or trader. See you tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Until then, God bless and thank you.